Hey guys, welcome back. Happy Monday. Last week we saw a rejection of this level and kind of we came down into the support, right? And we discussed that as long as the support kind of held, the market really wasn't bearish. So far what ended up happening last week was we continued to chop sideways, but we're still kind of stuck, right? Stuck below this trend line channel, stuck above the support channel. So the market kind of has just kind of been in an awkward kind of range bound chop overnight, right? The futures, you saw that we pretty much dipped into support and we bounced back up. So now the market kind of has, like a couple of options, right? And to be very honest, the action looks to be in a bear flag. The bears have a shitload of work to do before the market actually turns bearish, right? So at minimum, we know for a fact that you could see this is a very intense demand zone right here, right? So if we were to break below this 3,900, then obviously the next support that the market has is at 3,850 to 3,830. And as you've seen in the past, until we break down from this level, like you can't be swing bearish at all. Like scalping is different. Scalping on a smaller time frame and playing, sell-offs are completely different. But if you are someone of the opinion that this right here is kind of following 2008, and this is kind of where your B wave ended, then first of all, right, this level is the most important level to take out. And second of all, this is pretty choppy price action. So even if you consider this to be some kind of leading diagonal in a wave one, what does that mean? That means that you will still end up seeing, a push to the upside, right? For that B wave before the market kind of has that next move down. So I feel like if you're bearish, right, I still think the market is kind of going to push up higher. But if you're bullish, there's kind of a couple ways this could go, right? Obviously, number one is this is definitely something to consider, right? Instead of going to a new low, we could just come back to retest, right, this prior level of support at 3,700 before the market, pushed up to that 4,300 level. What is kind of the next scenario? The next scenario is if this is just kind of a choppy kind of B wave before a C wave, you would obviously, right? You would obviously kind of need to break below this 3,900 level, and then you will see, kind of the fifth wave to 3,780 before the market kind of pushes up to, to start the C wave. And then lastly, right, what is kind of the more bullish version that we kind of see in the market, right? So again, I've shown you this, right? It's much more clearer on SPY. I do have a lot of shit on that ES chart, but as you can see here, right, we remember when we were around 411, we spoke about how this is the channel, right? A rejection below this channel will very likely come back down to this previous level of support. See kind of how well that played out, even though it's instead of going straight down, kind of been a choppy mess. So again, right, if this is kind of a wave four, I mean, futures kind of invalidated this as a wave four, versus this could more likely be a wave B, right? In a wave Y, right? But on the SPY chart, it hasn't invalidated, so I haven't changed the labels. But yeah, again, last time we discussed, right, either this is going to, if it stays below 393, then it probably, comes down to retest 375 before it proceeds higher. And obviously, we discussed the other version, right, where the market retests this 402 area, right, before we come down to 370 and before we bounce. And lastly, right, what is kind of the more bullish version? Again, this is assuming as long as the support holds, right, the market could push up to the top of this channel, right, 413. And this again, even though this does look like a bear flag, if you go into the smaller minutes, this could be calculated as an ABC12, right? So 1, 2, 3, 4, 5 and a way one. And obviously this is kind of the bullish version I have. The same kind of can be seen in QQQ, right? You'll be able to see once the chart loads that you know, you can kind of see this trend line held. That's kind of why you had the bullish impulse, and we discussed that last week, right? So again, if you are super bullish, right, it should be able to push up to the top of this channel to 324, retrace for 1, 2, 3, 4, 5 before we come down. And again, a more bearish version would kind of be, right, any push gets rejected and we come down to, you know, retest around 280, 275 before we push up higher. So obviously these are, again, the bull versions that I told you about. If you're on the more bearish page for, you know, kind of this being an ABC, again, this is very choppy. There's no way, unless this is kind of some kind of leading triangle, diagonal, right? Probabilities are pretty low. This is a 1, 2 going down for a 3, 4, 5. Maybe, right? Maybe if you're super bearish, the one scenario that could happen is, you know, it does have a gap to kind of fill at 325. So maybe a push in the 325, 330 before the start of the next downside move is the only kind of bear scenario I can think of. So yeah, that's just the market. We can kind of look at major indexes like the dollar, and the dollar, as we saw, right, we broke out and then we pushed up into prior resistance, exactly where previous four rejected, and we're kind of selling off. And the dollar does look pretty impulsive. Before I had this as an ABC, I still can see that, right? But I'm leaning towards a more 1, 2, 3, 4, 5 on the dollar, which could, excuse me, which could, you know, kind of give that gas for the equities to, you know, kind of move higher. And again, if that ABC kind of scenario that I had, right, given that we did break out of this downtrend wedge, play out, then this kind of the blue scenario that I had drawn on the Qs, right, where we go higher and then we push lower. Once this chart loads, I'll be able to show you is, yeah, where we kind of, you know, this light blue one where we just kind of push up and then come down could be of, you know, a more higher probability, just something to kind of watch out on. And obviously I am still, you know, watching the more bullish and more bearish options as well. So yeah, the dollar looks good. Let's talk about the wicks, right? We discussed this chart a lot of times, and you know, we saw how this is a channel, this is a channel, this is a clear example of TA playing out, right? And the wicks you can see has made a lower high. So again, if you're super bearish, you would need the wicks over 30, right? 30.3-ish to actually, you know, break out of this. Then you can consider this to be a long sideways channel before it has a massive breakout. But yeah, as you can see here, kind of been making a lower high. So again, that could indicate a higher market. So kind of keep an eye on this 30 level. Let's look at the 10-year. Remember, we kind of had that ABC on the 10-year chart. You can kind of see how well this ABC has actually, you know, we rejected off this green line in an ABC, and then now we're coming down for the C wave. So again, I do have this, right, in a wave C. So most bounces probably get rejected till we come back to prior support around 2.7 before the start of a fifth wave on the yields. So yeah, that's all I had for indexes and kind of the broader thinking on the market. Let's get started on this week's watch list. Again, this week's watch list is very dependent on the fact that, you know, it actually follows through on the breakout. So TLRY, we discussed how this is very likely, you know, going to come down to like 2.3-ish. And you can kind of see that so far it did have a very nice, you know, 10% move off the bottom of the channel, but it's come up right against this resistance level. So this is kind of the trigger point on TLRY, right? You would need it over 2.7. If it can break 2.7, TLRY doesn't really have resistance up to 3.2 and even 3.5 and $4. This could kind of be the start of a massive breakout, so definitely worth keeping an eye on. Again, it could definitely reject and, you know, come down to test another one more low with before it bounces. But yeah, kind of keep an eye on 2.7. The next one I kind of have is coin, and again, the reason for that is I have been bullish on Bitcoin, right? And coin has split out pretty well, but I do think Bitcoin kind of is extended. So I am thinking that coin, whether you're bullish or bearish, will kind of, damn, my Wi-Fi, yeah, there we go, will kind of, you know, so there's two kind of scenarios I'm watching. Either this, you know, finishes a wave 3, comes down for that wave 4, right? or this finishes off a wave 1 and comes down for the wave 2. In both these cases, right, a minimum below, I kind of have below 78. Coin comes down to, 75 and 72. That's the minimum retracement. A more bearish retracement would obviously come down to 57. And if it follows through, then even 49 before it kind of bounces. So yeah, I think coin could be an interesting one since it's kind of getting extended. The next one I kind of have on this week's watch list is BABA. And again, the reason for that is, again, it has been kind of selling off for kind of 2 months, and you can see, extended RSI divergence. Once this chart loads, you'll be able to see that the market has, been in an extended divergence that could, right? You can see there's a bullish divergence playing out on the 4-hour chart that could lead to an oversold bounce. So BABA, again, either this is a WXY, right? Given that it's broken out, or some could even argue that this is a wave 4, which could make a wave 5, right? In that case, this would be a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. So in either case, I'm thinking BABA, this level right here, obviously it does, right? Let's just say it gets more bearish and it comes to fill this gap. You can see it has tremendous, either it gets over 82 and goes to 87, or it comes down to 77 and bounces off the support to go up to 90. So yeah, they're kind of the two scenarios where BABA could bounce. So that's why I have BABA on this week's watch list. Last but not the least, I have AVGO, and the reason for that is, again, we know semis are super extended, but again, this is a very bull flag breakout, right? So again, levels, right? As long as it stays below 636, and let's just say 640, round off, I think you can see it does have a massive gap to fill around 600, right? Obviously, bigger picture, I do have this as a C wave, but I doubt it's going to start at C wave immediately. It could, right? What I have drawn as a wave 3, where this could be your wave 3, your wave 4, wave 5, and then come down for the B wave. But yeah, this is something I'm watching. Super overextended, a lot of RSI divergence below 630 could definitely, come down to that 600 level. So yeah, keep an eye on it. But yeah, obviously it kind of is on a breakout. So yeah, make sure it stays below the resistance. All right, guys, thank you so much. Have a great week.